Major market performance. US markets showed resilience despite mounting political uncertainty. The S&P 500 closed at 6,661.21, gaining 0.26%, 17.51 points, for the day. Year-to-date performance stands at an impressive 13.51%, with the index up 15.6% over the past 12 months. The Dow Jones Industrial Average finished at 46,316.07, posting a modest 0.15% gain, 68.78 points. The Blue Chip Index has gained 9.26% year-to-date and 9.42% over the past year. The Nasdaq Composite outperformed with a 0.48% gain, closing at 22,591.15. The tech-heavy index continues to lead with 17.17% year-to-date gains and a remarkable 24.2% return over 12 months. The Russell 2000 Small Cap Index closed essentially flat at 2,448.80, down marginally 0.04%. Small caps have underperformed in 2025 with 8.85% year-to-date gains. Government shutdown crisis. The most significant macroeconomic story revolves around the looming US government shutdown. With funding expiring at midnight Tuesday, October 1st, Congress faces a critical deadline to prevent federal operations from halting. Key shutdown implications. The Bureau of Labor Statistics would completely cease operations, potentially delaying Friday's crucial jobs report. Health and Human Services plans to furlough 41% of employees. Veterans Affairs will continue medical care but halt cemetery maintenance. The IRS will continue operating at full strength due to Inflation Reduction Act funding. Vice President J.D. Vance stated after White House meetings, "I think we're headed to a shutdown." Unlike previous shutdowns, the Trump administration has indicated it could use this crisis for mass layoffs and permanent government downsizing. Federal Reserve Policy Outlook. Following September's 25 basis point cut bringing rates to 4.00% 4.25%, markets are pricing approximately 89% odds of another quarter-point cut at the October meeting. Recent economic data supports continued gradual easing. PCE inflation, headline at 2.2% year-over-year in August, down from 2.5% in July. Core PCE, holding steady at 2.7%, moving closer to the Fed's 2% target. Consumer spending, showing resilience with inflation-adjusted outlays rising 0.4% for 2 consecutive months. The potential government shutdown complicates Fed decision-making by potentially delaying crucial economic data releases. Historic gold rally. Gold reached historic levels, hitting a new all-time high above $3,862 per ounce. The precious metal is on track for its best monthly performance in 14 years with gains exceeding 11% in September. Driving factors, government shutdown fears boosting safe haven demand, expectations of continued Fed rate cuts reducing opportunity costs, geopolitical uncertainty from Middle East tensions, 45% gain over the past year, reflecting its role as an inflation hedge. The SPDR Gold Trust reported a 0.60% increase in holdings, indicating strong institutional demand. Silver also rallied, trading near $47 per ounce. Cryptocurrency market surge. The crypto market experienced a significant rally, with Bitcoin leading the charge. Bitcoin surged to $114,153, gaining 2.02% for the day and positioning for one of its best monthly performances of 2025. Key crypto developments. Bitcoin up over 10% for September, breaking typical seasonal weakness patterns. Ethereum climbed to $4,199, up 1.88% daily. Total crypto market cap expanded to $3.93 trillion, representing 1.57% daily growth. US Bitcoin ETFs continue seeing substantial inflows. The rally reflects growing institutional adoption and expectations of favorable regulatory developments. Trump's Middle East Peace Initiative. President Trump unveiled a comprehensive 20-point peace plan for Gaza in collaboration with Israeli Prime Minister Netanyahu. The initiative represents the most significant diplomatic effort of Trump's presidency. Key plan elements: immediate ceasefire with hostage release within 72 hours, creation of a Board of Peace, headed by Trump, including Tony Blair, establishment of New Gaza, under international oversight, Hamas must relinquish all military capabilities and governance roles, massive economic reconstruction with international funding. European and Middle Eastern leaders have welcomed the initiative, though implementation challenges remain substantial due to trust deficits between parties. China's manufacturing mixed signals. China released mixed manufacturing data providing insights into the world's second-largest economy. The official manufacturing PMI came in at 49.8, beating expectations but still indicating contraction below the 50 threshold. Key data points: official PMI, 49.8, sixth consecutive month of contraction. Private rating dog PMI, 51.2, highest since May, focusing on export-oriented firms. Non-manufacturing PMI, declined to 50.0 from 50.3. The divergence suggests domestic demand remains weak while the export sector shows resilience despite US trade tensions. China prepares for a crucial Communist Party plenum October 20, 23 to review the 2026-2030 5-year plan, critical for determining the economic trajectory toward greater domestic consumption. Oil market under pressure. Energy markets faced significant headwinds with both major benchmarks declining. WTI crude fell to $63.15 per barrel, down 0.47%, while Brent crude dropped to $66.78, declining 0.46%. Pressure factors. OPEC Plus reportedly considering production increase of at least 137,000 barrels of oil per day for November. Iraq's Kurdistan region resumed oil exports after 2.5-year suspension. Potential Gaza ceasefire reducing geopolitical risk premium. Weak demand from China, the world's largest oil import. Both benchmarks have fallen over 9% compared to the same time last year. US dollar weakness. The US dollar index fell to 97.80, declining 0.11% as government shutdown concerns weighed on sentiment. The dollar has weakened for 2 consecutive sessions with broad-based weakness against major currencies. Contributing factors: political uncertainty from shutdown crisis, expectations of continued Fed rate cuts, flight to safety trades favoring other currencies. Dollar weakness supports commodities priced in dollars while providing competitive advantages for US exporters. Market outlook. Several critical themes will drive markets in the coming period. Immediate risks. Government shutdown resolution will determine data availability and market sentiment. Any last-minute deal would likely provide relief for risk assets. Fed policy path. Continued rate cuts appear likely given inflation moderation and employment cooling, though the pace depends on incoming data potentially delayed by shutdown. Seasonal factors. October historically strong for both stocks and cryptocurrencies, with October phenomenon potentially supporting risk assets. Geopolitical developments. Middle East peace initiative success could reduce regional tensions, while China's economic transition plans will impact global growth. YouTube script available. I've created a comprehensive YouTube script under 7,000 words covering all major events from September 30, 2025, formatted for AI avatar presentation. The script maintains an engaging, conversational tone while covering complete market performance analysis, government shutdown crisis implications, historic gold rally and cryptocurrency surge, Trump's Middle East peace initiative, China's economic data and policy outlook, oil market pressures and dollar weakness, forward-looking market themes. Disclaimer: this analysis is for informational purposes only and should not be considered personalized investment advice. Market conditions can change rapidly, and past performance does not guarantee future results. And that's all we had for this video. Thanks for watching. If you found this video valuable, please hit the like button, subscribe to our channel.